Good morning, everyone, and welcome to the European crossover webinar. And we're seeing once again a new day, a new high in the SPOOs. We've actually gone and made a run up here into the 32 and a quarter. We did get that dip. I mean, we got that move on the close. I thought we would get that where shorts kind of throwing the towel. And we may go and see a high in Asia, which we did, but we're still holding relative to that high overall. So let's see if we do go and pair back. We did go on to see the dollar yen move up. I actually got short. It didn't get to my level I wanted to. I was looking for 1034. I know Blake was looking around 1025, but short now. If you think about where this dollar yen is, honestly, we should be at 115 actually at this point. Where you see what the S&Ps are, and easily we should be closer to 113, if not 1250 at the very least. So this pair has just been drug up, kicking and screaming here. So and also another thing is also look at the peso. Oh my God! I mean, this is, you would think you were looking at a 5-minute chart. Hard to believe this is actually a daily chart. You can see how quiet. I mean, just there is absolutely no range whatsoever. I mean, like I said, you'd think you're looking at a 1 minute or maybe a 5-minute chart, and it's hard to believe this is actually a daily chart. And there's just absolutely almost no trading in this pair. Euro dollar, we slid yesterday. We had that German report. We're doing okay, holding up around the 60s or so. And saw that German report that the manufacturing sector is in recession and no sense of bottoming out. No sense, but no, I guess we call possibility at that point of bottoming out. And we really put the undertone on this and opened the door for this market to go weaker than we have. We did hold the value area yesterday, but we just didn't see much of a bounce, and we're just kind of hanging on. The market is still overall has a bullish tone because we are above that trend line, but we are struggling a bit to say the least. Cable continues to move higher, and boy, we have moved much higher today. It doesn't seem like a whole lot higher, but I will tell you that we discussed that yesterday. This 3082 is huge. I mean, it's on a weekly basis. Really opens the door for us to move higher, and we will go on and get to that. So let's just go on and take a look at the couple of stories as we move in today, and then we'll see the economic data. Actually, we're going to touch on the economic data right now. So we did get Italian trade balance out and also Eurozone current account. And as we move later on into today, into the States, and that's it right now. But as we move into the States, we do have retail sales out. That's UK retail sales at the bottom of the hour. Italian Consumer Price Index, that's going to be at the top of the hour, as well as HICP Eurozone. And then as we move into the States, we do get building permits at 8:30 Eastern, as well as housing starts, industrial production and capacity utilization at 9:15 Eastern. As well as we get the JOLTS jobs openings. Kind of odd. I'm not used to seeing the JOLTS on a Friday. And then we do get University of Michigan, fresh readings on University of Michigan. And they're looking for 99.3. Last month was 99.3. So just two stories, and we'll start at the one with the Aussie and the Kiwi. The Australian and New Zealand dollars struggled to make much of a better China data. Australian and New Zealand dollars were heading for a flat finish for the week on Friday as a raft of Chinese economic data either met or beat forecasts, just not by enough to inject much momentum into a stalled market. While the Chinese economy grew at 6% as widely expected, both retail sales and industrial output topped forecasts in a hopeful sign Beijing's policy stimulus might gain some traction now a trade truce is in place. That nudged up the Aussie a fraction to 69, but still left it unchanged on the week so far, having to clear resistance at around 69.35. It's also closer to this month's low of 68.49 than December's peak of 70.32. It fared better on the safe haven yen, having risen around 1.2% over the past 2 weeks to reach 76.03 Aussie yen. The Aussie now faces huge short resistance around 76.5. The Kiwi firm to touch to 66.44. Data out for New Zealand this week showing resurgent home prices and an upbeat survey on inflation have provided some support by further diminishing expectations of rate cut. Markets have also given up on existing easing of the RBNZ next policy meeting on February the 12th and implied around 40% chance of a move by June. In contrast, futures are pricing in a 46% chance the RBA will cut at its meeting on February the 4th and with the probability rising to almost 100% by June. Widespread bushfires and the depressing effect on already weak consumer sentiment has added to the case for further stimulus following 3 rate cuts last year. With consumption slowing post the RBA's December meeting and the ongoing catastrophic bushfires likely to drag further, the RBA will likely downgrade their optimistic outlook, said UBS economist George Theriault. Hence, given the RBA's commitment to reassessing the economic outlook in February, we continue to expect they are likely to cut the cash rate by 25 basis points to 50 in February. And you can certainly see why that would make it a rather tough road to hoe for the Aussie dollar to gain any meaningful strength. So dollar hits 8-month high on yen and yuan buoyed by China GDP. The dollar scaled an 8-month high against the yen on Friday after upbeat U.S. retail sales and jobs data, while the yuan got a lift after China's economic data brightened the mood already cheered by a Sino-U.S. trade deal. The dollar rose to as high as 10.30 and the strongest since late May in 2019, extended its rally from 107.65, a 3-month low fueled on Wednesday's last week. The U.S. retail sales increased for a third straight month in December, and the number of Americans filing for claims to unemployment benefits dropped for a fifth straight week. Our data showed a gauge of manufacturing activity in the U.S. Mid-Atlantic region rebounded in January to its highest in 8 months, leading the Federal Reserve Bank of Philadelphia to call the factory outlook the brightest in more than 18 months. A lift in U.S. Treasury yields, a firmer U.S. dollar, and record highs in many global equity markets have encouraged the dollar yen, said Richard Grace. The Chinese yuan edged up, hitting a 6-month high of 660 to the dollar in onshore trade. Industrial output and fixed asset management investments for December beat market expectations, while the country's fourth quarter GDP growth came in at 6% from a year earlier. So with that, let's go on and move into the analysis. And this other way. And trying to pull up my regular charts and see if that'll come up. Oh, there we go. I think we are. There we go. Bear with me. Let's go move into the euro dollar. Okay, it says the euro retreated closing the day just above 1130. Early in European trading on Thursday, a report came out of Germany stating the country's manufacturing sector is in recession with no bottom in sight. Understandably, this set a negative tone, placing the euro on the back foot for the rest of the day. The value level of 1127 did hold, but the rebound was poor. Overall, the euro bias remains positive while we trade above the trend line. The pair needs to defend 1105 on a closing basis. Resistance remains 1170. So let's go on, pull out the old trusty bias chart. So the resistance is going to remain the same, but our support comes in at 1105. It's critical that we hold the 1105. Now, as I mentioned yesterday, that report we were actually tagging up, brushing up against this key 1170, which is key for a further move higher. And just getting the coffee out of the way. And we came out with that report indicating that German manufacturing was in a recession with no rebound in sight. That really set the tone and pushed this market lower. We did hold above the 1135 and held, or we got to 1135. We're actually, if you remember correctly, we were looking for a bounce at the time. And we said a little bit of a bounce, but we said that the market would come down to the value area. We did, but once we got down the value area, we just really struggled quite a bit. Couldn't simply, you can see right here, couldn't really get any real movement above the 1135. Now we've kind of meandered around here, but the key looking out is right there. You see there, 1105. We need to defend this 1105 on the close. We do. If we don't, regardless of this trend line, it's going to open the door for us to go on and move down here to 1020 if we lose the 1105, because now you've closed at new closing lows for the week, and that'll just open the door for us to push lower. So critical that we defend that 1105. Resistance is still going to remain this key 1170. If we can get above 1170, well, we can extend this leg and then challenge these highs to move much higher at this point. Let's go move into the cable. There we go. Now, I mentioned in the chat room yesterday is, hey, be careful. We're opening them to go higher, and that's exactly what's happening here with the cable. And says the cable continued its steady climb. Intraday resistance is 31.28, with weekly resistance at 30.81. A close on Friday above 30.81 opens a challenge to 33.28. Support on Friday will be 30.36. So you can see we're continuing to move higher. Short-term resistance is 31.28. Let's take a look here. I shared this yesterday in the chat, and look at that weekly right here. If we close above 30.82, you can see this on the weekly. Look at that right there. That opens the door for us to move higher. And where I'm coming up with this target, if I want to call it target, next chart right there. You see that? 33.28. So if we close above here, that'll be our best weekly close in the last 4 in a month. Allow for this market to move higher. We're certainly doing that right now. Short-term resistance is going to be 31.28. But you can see we continue that up move here. With support coming in at 30.36. Aussie once again tagged stops above 69.14. You can see that level's been hanging around here, but could not retain the level. The pair is now suspect to a move to 68.48, where a close below will send the pair to 67.68. Resistance, it remains 69.14. So look, we've goosed the stops a couple of times here, but we just can't seal the deal with the close of 69.44. Now, coming into the phase one signing, this was the area we were looking for, which was 69.42. But we've mentioned is, boy, people have really loaded the boat on this thing, looking for a move lower in expectation that the RBA will be placing a rate cut on here. And obviously that would end up weakening the Aussie dollar. So now with this so far inability to get above the 69.14, and which now what I thought we might get was a stretch into the phase one deal up here to 69.42, which I thought would have offered a nice area for the short there, and then we start to roll back with with all the shorts that have been placed on. We're still hanging around here, but once again, and that certainly has to do with the move we've seen higher here in equities. But that being said, I've not been able to go and get above at least on a closing base above 69.14. So resistance will be moved down here to 69.14. And support's going to come down here to 68.48. Right now, this is what we're looking at for this market to challenge here. And if we do get a close, if we do come down here to 68.48 and get a close below that, then we're moving lower. And realistically, that's going to push us down to 67.37. So you'd be losing about 110 pips if we get a close below 68.48. Okay, the dollar or CAD remains in the proverbial, can't even speak. Dollar CAD remains in the proverbial basement, unable to generate a lift. Support on Friday will be 29.89 with resistance at 30.82, followed by 31.13. So we've certainly reduced our expectations at this point. Now, here's that key 31.13 that we were looking at last week. I was thinking that it was going to get there, and boy, I thought that was going to be a great short. We fell short of that, and then we kind of rolled back. I think we closed the day like at 30.65, and then ever since then, we've been rather subdued, despite the fact that we had jobs report last Friday. So you can see here that we've just been getting quieter and quieter, and now, look at this. It's just barely even trading almost. So if we do go and get that slip back, support at this point is going to be 29.89. And resistance is 30.82. Well, there's no change here in the peso whatsoever. And we were talking about how this market's barely even trading. I mean, as tight as these ranges were for these days, the last 3 days have just been like unbelievable here. Look at that. So each range, each day seems to get subsequently, can't even speak this morning, subsequently tighter. And what we've been looking for is a move down here to 1865, confluence with 1862, which is 161% of this recent failed rally. I guess there's something to be said that it refuses to get down there, but nonetheless, equity prices, i.e., the SPOOs, continue to move higher. Looking at the Russell, it's a bit higher too, as well as the NAS. So no change here in the peso. Still looking for 1865, 1888 on the upside. So at the dollar yen continues on its heavily restrained rally. Resistance for Friday is going to be 1034/50. On the backdrop of the ongoing equity rally, support is 964. Now I call it heavily restrained because, as I mentioned yesterday in the chat room, I think it was late yesterday afternoon, this market has been brought higher. Let's put it that way. Literally kicking and screaming like a kid going down a grocery shopping aisle. I mean, this thing does not want to go here. If you take a look where S&Ps are at right now, this pair should be at 115. So that kind of puts this in context. And I don't think that's a great exaggeration whatsoever. You look at all-time highs for S&Ps, we could make the case we could be closer to 120. But I'm just saying, at the very least, reasonably speaking, let's say reasonably speaking, this should be 500 pips higher. Worst case scenario, we should be right here. Worst case scenario, right there around 113. So the fact that we're easily 300 pips lower, this market just simply doesn't want to go higher. No matter how much you push these S&Ps, it doesn't. So if we do see this pause here in the S&Ps, the door certainly would be open for us to go in and move lower. Resistance for today. I still have my trusty 1034, but we'll like this. I did get short, didn't reach to my 1034, but we did make it up to, I think it was 1028, I think it is, or 1029. And, but like I said, as I mentioned, the unwillingness of this market to move higher, and certainly if we do get the SPOOs to pair back, will open the door for us to go on and be pulled back down. Support is going to remain the same at 964. Once again, there's no denying the bullishness of this, so it still remains bullish. And with that, let's go move to the cash dollar index. So the dollar index favorably responded to the recent low test. Remember, we had that 97.34, 97.13, I should say. And on, I believe it was on Wednesday, we didn't quite get there. I think we got to, what was it, 97.18, and then we saw the market bounce back. Then yesterday, we went and took out the 13 by a little bit. We did bounce back. So here we are today. So it responded, but it was still unable to close above. You can see there the peak line, the 97.42. Additional resistance will be 97.67 with a break to new lows to test 96.80. So in the short haul, right here, and we got this downtrend line. We're not that far from 42, and I really don't want to think that it's going to make it up to 67. So let's just go right here with this trend line. Just call it 97.51 for today. And 96.80 is going to remain the same here. And I still contend it's still bearish. We need a daily close above 97.42 to generate some buying. Doesn't mean it's going to go, crazy, but well, it's going to be important though if we close above that on a Friday. But that real resistance area is the weekly pivot, this 97.89. With that, we're going to move into the cross rates. So the Kiwi yen is still holding up relatively well. We haven't made the challenge yet. Actually, we made a bump up there as far as tagging up here, but it's this key level right there, the 73.32. We were in the chat room, and I did post on there at the time. I think we were just about there. I think we had our intraday resistance at, what was it, 70.34? Yeah, 73.35. I think it was a 34 like 2 days ago. We bumped it up 1 pip. And from an intraday perspective, I should have jumped in there and taken that because we made it up there, and then I think we came all the way back down to 73.01, so it wasn't a bad grab at all. In the meantime, the dollar yen was just sitting there like a bump on the log at the time, trading at, I think, around 10.06 or something like that, and just gently moving higher. But that's going to remain the resistance right here, 73.35. Support, we will, let's see, 72.43. Support's going to be a little bit higher. You can see it's right here, right there. 72, right there, 72.69. Let's go and move on here to the euro yen. Well, we've had 22.92 yesterday, and we almost got there. We got to 22.87. We're going to go and keep that 22.92, although you can see here it's almost forming, although the wick's a little bit short. If the wick was a little bit long, we could, but we're still, the day is very, very young. But I'm saying it would almost be like a Greystone doji, but no, because the range is very tight. The wick's too short for that. But resistance remains 22.92 with support at 21.94. We're going to go and keep that one there. This is a bit suspect here, 22.39. We can easily start to slide back. So as I mentioned, support's going to come in right there. It's 21.94. Okay. See that right there? So support and resistance is going to remain the same here on the euro yen. Well, this euro odd is doing a whole bunch of nothing. It's almost a battle of the two weakening currencies. Euro, as I said, is on its back foot. Things were looking a little bit okay over the last couple of days, and then all of a sudden that German report came out about their manufacturing sector being in a recession and no signs of bottoming out. That took the wind out of the sails for the euro, and as we've already mentioned about the Aussie dollar, with the potential for a rate cut coming into this next meeting in February, obviously impacted by the weak consumer sentiment and demand, as well as the Australian bushfires. So certainly portends for the potential for a rate cut and has the Aussie on its own back foot. Hence, I say it's a battle of the two weakening currencies. So I don't see any changes here whatsoever. That's going to remain the same here on the euro odd. We're looking for 60.92 for support. Resistance, that I would have to say probably would be a stretch here at this point. So resistance will tame that in a bit to be right there. Let's call it 61.94. And because we've moved it higher, we'll just still keep its bullish sentiment here, at least for now. And taking a look here with the Euro Kiwi. Kiwi continues to hold its own, although it's having a little bit of trouble trying to move much higher. But nonetheless, it's holding its own, unlike the Euro. So the door's open for us to continue to weaken a bit here. Support is going to come in right there. You can see that. It's going to be 67.06. We previously had the 02 here, but let's move this here. We have that level there, 67.06. And resistance, we had marked up for 68.48, and that'll be fine. We'll go and keep that. Aussie yen is just kind of holding its own here in a rather quiet session. No changes from yesterday. I mean, obviously, like I said, look how tight this range is. So we're looking at 76.19. You can see the key level there, 76.19. Support is going to be 75.20 if we do get that slip. And here's the guppy. We did get above this 43.81, and we closed above it, and we're kind of holding, but we're peering back a bit at this point. Let's go on and move into a 2-hour chart to see if we can see anything else. You can see the significance of that 43.81. If we do get a little bit of a slide, support's going to come in right there. 43.56. And on the upside, 44.37. Actually, 44.55 is the 50%, and we got up to, looks like we just tagged it. Well, we got up to 44.52. Yeah, it'd be 44.55, this 50%. So let's go with that. Now we'll switch this back to bullish. On a short-term basis, we had that as bearish, but it certainly has changed things around here. So we'd actually have to break below here, 42.11, on a daily close in order to go flip this. Actually, even be lower than that to flip it to bearish. Let's go on and go with the sterling odd. We are still holding above the trend line. We had a nice movement, especially with the strength that we've seen here with sterling overall, and we actually got past the 89.30 resistance. In the meantime, during this time, it's going to be right there. You see there? That'll be resistance. 89.76. We did get above it, but we're below it right now. It's going to be 89.76. And this guppy is really paring down a bit here. You can go on the 2-hour chart. Look at that. For right now, we're doing a bit of a reversal right here in this 2-hour chart. See where it closes. Support. That was on the guppy though, but we're seeing the same thing also with the sterling odd right here. Look at that. We are really coming off. Support comes in right there at 88.93. Holy smokes. We are coming into some support right now, or just about. Might be a bit rich there, but we'll stick with that. 88.93. With that, let's go on and I was just going to say, let's go move into the majors and see what the cable's at. Whoa, we have seen quite the sell-off here in the cable. Obviously, we had that UK data, and that has really slammed this thing here. Look at retail sales come in here. They have really knocked this thing for a pretty good loop here. Remember, 3082. We had 3128 as our inter-resistance. With 3082 is key. If we can close above 3082, it really opens the door higher. But we're certainly under some pressure at the moment. Dalian still holding its own here at 1018. Would like to see that a bit lower here. But certainly the guppy, certainly a pretty good turnaround. Euro, we're under pressure here at 1128. Like I said, it's important that we hold the 1105. We are seeing NASDAQ on its highs, NASDAQ futures. SPOOs are holding here at about 32.23, and the Russell above 17, right at 17.11. So we're still holding those bids here. The key will be, like I said, we'll see how we finish them up today. Dollar is still holding here. We do have the resistance at 1034/50. Dollar index would need to get above 97.42 on a closing basis to generate some further additional buying. And that's where we stand here. Good luck, everyone, and we'll see you in the chat room. And thanks for joining us here on the European Crossover webinar.